Welcome to Market View with Ike Iosa and Friends. This show that not only reveals and analyzes the inside story on today's market news, but also uncovers the areas where investors can make money right now.
Let's make good morning. Mike Iosi, your host for Market View. This guest, a very special guest, Mr. Sherman McClellan. Hi, Sherman. How are you?
Good morning.
Sherman, last time we spoke was on July 25th. And at the time, you told us that you were expecting the market to top right after Labor Day and pretty much decline into the election, which is exactly what happened. The market topped on September 3rd and bottomed on November 2nd. So you were spot on. And I'm really curious to hear your thoughts going forward, especially because I'm looking at the ratio adjusted oscillator. And I have circled the action the last few weeks. The reason I did that is because I wanted to ask you a very specific question. Our old late friend, Kennedy Gamut, used to talk about complex tops and complex bottoms in oscillator. And looking at this formation, I was curious, is this a complex top or not?
This is a complex pattern that's above zero. And what complex patterns mean to me is that whichever side of zero the complex pattern is on means if it's above zero, the bulls are in charge, and if it's below zero, the bears are in charge. And in the middle of the chart where we had February and March and the very negative numbers on the oscillator there, obviously that's a complex pattern also where the bears were in charge. So now we have the bulls in charge, and the bulls are in charge because there's so much liquidity available as a result of the actions of the Federal Reserve Board, and the Treasury to supply funds to the economy. So it's a mature pattern to me, and I'd expect that before very long we'll have some negative numbers on that, especially in the first 3 weeks of January. Perhaps would be the time to look for that to happen most likely.
If we turn our attention to the Summation index, its current level suggests a pretty healthy market, and it is supportive of the bullish case, correct?
Yes, it's at a very high level. The RASI currently is, in my understanding, is about 1063, and there's a break point around 500. That if it can't get above that significantly, then we have trouble in the market and illiquidity issues. But currently we have a RASI that's doubled that at 1063, and really bad things don't happen when you're up at that high of a level. You can get a 2, 3, 4% correction, but that's usually about all you can get out of that. When you're up this high. Summation is at a high level, and that means we have a correction that's due.
Is anything else you want to add about equities before we switch over to gold?
No, there's nothing that's indicating that we've reached the top of the market so far. We don't have divergences. We don't have a RASI failure at 500. We have presidential cycle patterns that say we should be rallying probably into the first or second quarter of next year. And so that's where I would look likely to be the top of that would be a more important top than what we would get currently. There's some adjustments that will take place because of the change in administrations.
Back in late July when we spoke, you also talked about the significance of the divergence in structure between gold and silver in connection with the 8-year cycle in gold. Since then, gold has been going, I would say, reluctantly sideways to down. What can we expect for gold and silver going forward? Have we seen the top for gold and silver, at least for a while?
Well, it's gold and silver seem to have topped out, and that's been in right on schedule as far as our 13 and a half month cycle. And we at the top of that we have a little mid-cycle low that develops, and the issue is now whether we can make a new high on gold, and if we can do that, it would be very bullish once we get past the next 13 and a half months cycle low. And if we can't that, then generally it's bearish, and you look for a little deeper correction on gold and silver going along with it at the 13 and a half month cycle low around, I think it's April or something. Silver is currently relatively stronger than gold, and that says to me that probably there isn't an awful lot of weakness that we should be looking for currently.
Any last thoughts on the bond market?
The bond market, after say the first week or two of January, is not a place to be long, in my understanding. We're going to see much higher interest rates next year, and so we can have a higher bond market between now and for the next month. But after that, it's not going to be a very friendly place for the bulls in bonds.
I'm looking at long-term charts, and the period between 1980 and 1982 marked a secular top in bond yields. And so far, the action in 2020 looks to me that it could very well be that between 2020 and 2022, we get the opposite of what we got between 1980 and 1982, a secular generational bottom in interest rates. You have any thoughts on this?
The controlling cycle that I look at for bond yields has bottomed several years ago, and we're well past the bottom, and we should be seeing higher interest rates. But we have had the Fed and the Treasury artificially supplying liquidity, and we've had the coronavirus situation that stymied the economy somewhat, and so we've had an extension of very low interest rates, and that's going to be reversed before very long. So I'm looking for really 10 or 20 years of higher interest rates. They don't have to go as high as they went in the 80s, but certainly higher than they are now.
Sherman, anything else you would like to add?
No, we've also seen a very low in commodity prices, agricultural kinds of things, and I would expect that we'll see much higher prices in the future, partly related to weather, partly related to supply-demand issues, and so we're going to see higher inflation numbers. The Fed's, all of the central banks are trying to get to this 2% for some reason that I don't understand, and of inflation, and I think they're going to get there. And they'll probably exceed it, and then they're going to have to worry about that.
The irony of all this would be if, in the end, the Federal Reserve not only gets what it wishes for right now, but actually a lot more of it. And at that point, they will regret it. Anyway.
That's what the problem is. That they don't have a good control system for it because of the lag, have a lag time between what they do and when it takes effect, and they're always late in responding, and that makes everything late in action. So I don't expect they're going to manage it very well.
Sherman, thank you. Good talking to you as always. Happy holidays.
Thank you. Same to you.